With record net sales this quarter, how did Utz Brands do? All this and more coming up on Morris Money. Hello, welcome to Morris Money, where we give you stock tips in under 5 minutes. I'm your host, Morris Willie. Today we're discussing Utz Brands' first quarter results. Let's start with the highlights. As I stated in the beginning, Utz Brands recorded record net sales this quarter, with net sales increasing 26.6% year over year, and organic net sales increased 20.7% year over year. IRI retail sales increased 18.1% year over year, driven by strong Power Brands growth of 20.1%. GAAP net loss was $31.9 million versus $23.3 million in the year-ago period, and the adjusted EBITDA was $36.5 million compared to $37.9 million in the year-ago period. The company is also raising its full-year fiscal 2022 net sales outlook and reaffirming its adjusted EBITDA outlook. For fiscal year 2022, the company is raising its total net sales growth outlook from 7 to 10% to 10 to 13%, and its organic net sales growth outlook from 4 to 6% to 8 to 10%. This improved outlook for net sales growth reflects continued strong consumer demand for the company's advantage portfolio of snacking brands and higher pricing related to increased input costs. For fiscal year 2022, the company is raising its expectation for gross input cost inflation from the low double digits to mid to high teens, as key input costs have increased significantly, largely due to geopolitical events. That said, the company is taking incremental pricing actions this year to help offset these cost increases. As the benefits of the company's pricing actions this year to help offset these cost increases, as the benefits of the company's pricing actions and productivity programs continue to build, the company continues to expect to offset higher inflation in fiscal 2022. As a result, the company's adjusted EBITDA outlook is unchanged and expects fiscal 2022 adjusted EBITDA to grow modestly versus fiscal 2021 adjusted EBITDA of $156.2 million. Utz continues to expect strong adjusted EBITDA performance in the second half of fiscal 2022 and in fiscal 2023. Additionally, in fiscal year 2022, the company now expects capital expenditures of approximately $50 million, excluding the impact of the King Mountain transaction. In accordance with general accepted accounting principles, the $38.4 million purchase of the King Mountain's facility is expected to be booked on the company's statement of cash flow as a capital expenditure and not as an acquisition. Finally, the company continues to expect an effective tax rate of approximately 20% and net leverage at year-end fiscal 2022 to be consistent with year-end fiscal 2021. With respect to projected fiscal 2022 adjusted EBITDA, a quantitative reconciliation is not available without unreasonable efforts due to the high variability, complexity, and low visibility with respect to certain items, which are excluded from adjusted EBITDA. We expect the variability of these items to have a potential unpredictability and potentially significant impact on our future financial results. What did management have to say about the quarter? Well, the Chief Executive Officer, Dylan Lessett, I apologize if I butchered the last name, commented, "We are pleased to deliver record first quarter net sales with organic net sales growth of nearly 21%. Consumer demand for our strong portfolio of brands is at an all-time high, and we are incredibly excited about the continued opportunity to improve our market position in key growth channels and geographies. In addition, as inflation continues to increase, we are taking incremental price actions to help offset higher costs, and we are encouraged by our continued sales volume increases as price elasticity is better than we anticipated." He went on to say, "As a result of our strong top-line trends, we are raising our net sales growth expectations for fiscal 2022. Further, we remain on track to achieve our profit outlook as our pricing actions along with our productivity programs give us confidence that we will be able to offset the continuing high inflation as we exit 2022 and move into 2023. Let me know what you think below about this quarter. Personally, I think it was a strong quarter for Utz, and I'm glad to see that they're raising guidance for the year. But let me know what you think below. Please don't take this video as financial advice, and thank you for watching Morris Money.